Decoding real estate investments. A financial perspective. One thing Indians all over hate is paying rent. One of the earliest financial goals for most young adults is to save enough to down pay for an apartment. Investing in real estate can yield two types of returns: capital appreciation and rental income. Capital appreciation refers to the increase in property value over time. The capital appreciation for apartments in metros over the last 10 years is around 5 to 6% compounding annually. If 30 lakhs was invested in a 2 BHK apartment 10 years ago, its value would be about 50 lakhs today. The rental income for a 50 lakh apartment today will be 28,000 to 30,000 a month, which implies a 5% return. The consolidated return will be 10% to 11%. Not as much as you would expect. But are we recommending not to invest in residential properties? Well, the answer is no. And the reason is leverage. Leverage, which basically means that residential property allows you to borrow money up to 80% of property value at a rate possibly 1% to 2% lower than the 10% to 11% return we get from residential property. You cannot use leverage for equity investment because borrowing cost would be as high as 14% x to 20% per annum, which is higher than return from equity investment. Let's look at an example. The asset value of the real estate property is substantially higher than the scenario where the down payment of 4 lakhs is invested in a mutual fund with a return of approximately 14% per annum. The difference is the return from investing 16 lakhs, which is borrowed as a low-interest house loan. This also means that one should always use home loans for purchase of residential property, even if you have the cash in hand. Why stop with one? Will it not make sense to invest in multiple properties? Ironically, the primary reason is leverage. Too much leverage to the point where one is unable to pay the monthly installments can drive a person to bankruptcy. Secondly, these fixed assets have little liquidity and take 6 months or longer to sell. In conclusion, while investing in real estate has its advantages, it's crucial to consider factors like leverage, liquidity, and the potential returns before diving in. These careful considerations will help ensure that the dream of owning property does not turn into a financial nightmare.